What are some of the key elements that you would say are important when someone wants to invest their capital passively, a limited partner, for example, into someone else's syndication or maybe a fund? Some of the things that you look at. You mentioned a little bit about someone been through at least a full cycle. What else are you looking for, particularly from either the operator or the asset side, Matt?
Yeah, and I think this is the most important thing that most people don't do, right? I'd say 90% of people don't do the homework they should do. If you really want to be good at this, then you really need to be doing that homework on people and making sure you go through the steps and take the pain of like reading all the documents, doing the background checks and criminal checks and things like that. We have a 200-point due diligence checklist that we use on our stuff. And what I do is I'm looking at first the operator, right? What is their personality? Do they have the personality of, hey, investors are at risk. All the risk, I'm going to put it on them. Or am I going to be working with someone that's going to do everything they can to protect the investor? Do they have some excess cash available to solve problems when they come up themselves and have some personal liquidity to put in if they needed to? What is their operational expertise from each department that goes within a company, right? To me, because I'm a CPA, the most important aspect is the accounting department and understanding, because it tells me the story, right? About what's actually happening with the company. So the accounting department aspects and the financial reporting to investors, the communication with investors on that side. And do they have that in order? Do they have their marketing and their property management in order? Do they have their asset management? What are their policies and procedures with regard to asset management? What are they doing on a weekly and monthly basis? And who's doing it and what's their expertise? Who on their team is responsible for specific aspects of the deal, right? This gives you clarity and understanding how set up they are. Or are they a one-man shop or a two-person shop where they really don't have the bandwidth? And what's their interest? Do they have other income sources to where they don't need this deal 100% to make all their money? Meaning, I don't want them struggling on a month-to-month basis and have to go get other income sources, not have time for my deal that I'm working with them on, right? Because sometimes there's a lack of incentive for performance, which is really what I look for, is that incentive for performance piece. Is there a preferred return? Is there too much fee structures up front on a deal? Is there incentive for performance on the back end where, say, they hit a certain hurdle rate and they get a better return or a better split for them to do that, right? So I'm looking at this structure. I'm looking at the legal documents and saying, are these fair?
Right.
Can I kick them out if they commit fraud? Because I've seen a lot of these where you can't even kick them out, for fraud, right? And that's insane. So like things like this, from who is the character of this person? How buttoned up are they as an operator? Can I do background checks on everybody in the company as well, all the GPs involved? And sometimes GPs don't want to go through that. And if they don't want to go through that, then don't do business with them because they're the wrong people in the first place. And that tells you a lot, right? I think we mentioned, previously that one of the best ways to do that is ask them up front if anything's going to show up, on the report, and see what they say. If they lie to you, then obviously there's a problem there, right? You're just like, you're done immediately. Those things I think are really important. I also look at the financial plan and say, am I okay with all the financial assumptions that they put into their financial model? Because I have two 47-inch wide monitors behind me, all for financial modeling. And that's my superpower. And I love doing that stuff. And at the same time, I understand what that means with those assumptions and how much those assumptions can affect the profitability of the deal. Just because they're aggressive on certain assumptions doesn't mean they're going to hit those things. And you got to be careful on that side. And so these are some of the main pieces that I look at when I'm first starting to invest in and see if something even makes sense to look at further.
Matt, the accounting piece, the financial reporting, the flow of capital, obviously that's something, because you're a CPA and an auditor, you know what to look for. Would most GPs, to a rank and file person who's not a CPA or have auditing experience, even want to open their books up very far? And if they did, what's a layperson who doesn't have your capabilities going to really look at? I can look at a balance sheet and look at the assets, liabilities, and see, as you said, how much liquidity do they have? I can look at some of those basic things, but I wouldn't have the eyes or the experience that you have in dialing that in. What can a general LP like me do to get help? Or, again, how far will a syndicator or GP open their books? How wide should they open their books? I guess is another question to ask you.
Yeah, and that's a hard thing, right? Because some people are newer as well. They don't look as good financially, and they're reluctant to necessarily show people. They might have liquidity, and they just might have had a loss year or something like that, and they're nervous to tell people that, right? There's a number of reasons why they'd be just uncomfortable. That doesn't mean they're being shady or anything like that. but nobody wants to be like, yeah, here's all of my assets and
Right.
financials to every investor that comes in, right? I would typically come in and ask for like a personal financial statement or a general understanding of where they are on a cash basis and their different income streams that I'm seeing so that I understand from that aspect. And a lot of times I'll be asking these questions. I may not go into depth on the auditing piece of this and detail, deep dive audit on their stuff where I'm going to make them show me the books of every single entity they own and all of their different assets and all that kind of stuff. But I might want to go through and say, on this particular deal, how much liquidity are you putting aside for yourself out of this? And why are you not needing it for your other projects? Are you going to have this liquidity available for these other projects? And I think this kind of more deeper dive and questions started on the financial side, not really because I'm a CPA or anything, but because I used to own a property management company and I run a lending business. And you realize in those two businesses that 90% of people, including business owners, do not have their crap together when it comes to their financial situation. And they run out of money and they use money for their or in reserves for other projects. They commingle their personal with business because they need to, because they're barely getting by, or they overextend themselves, or there's a rehab overage, or a million reasons why they would need to do that. And then they can't live. And if they can't live, then they can't operate those deals, and those deals could have a problem. And there's a risk if they're in a bad financial position of them stealing more or misappropriating funds, or there's a million reasons that could go into that. And so that's kind of what I look at when I'm doing that. But I just ask for that personal financial statement mostly. And then I ask for, oh, hey, the financials of that deal or what this is going to look like on the financial projections. I might ask for more information on their primary business or something like that. If that's their bread and butter and I'm seeing income, I'm like, can I verify that, hey, you're doing this many loans or doing this many flips or doing your business? How do I prove that out so that you're okay on the financial side? If I see them marketing their company, I might go look at their companies and the history of those companies to see, is there any bad remarks or negative things about those specific companies as well, right? So I'm doing more of that kind of stuff than necessarily like every aspect of their financials. Depends on the situation and how much I'm investing. If I'm putting in
Yeah.
25 to 50,000 bucks, I'm going to do a lot less. If I'm putting in $1 million or something like that, I'm going to go deep dive on every aspect of that person.
And with that proportionate amount of capital, a good operator should expect you, in that case, to ask for that. So it comes with how much capital. You're exactly right. If I'm putting in a big chunk, then I'm going to demand a little higher level. I want to see inside, and if I'm the operator, I should say, "Yep, Matt, I'm going to show it to you because you're putting in a bunch of capital." So yeah, it works both ways.